Welcome, everyone. I'm thrilled to have you join me for today's homebuyers class. Whether you're a first-time homebuyer or looking to brush up on your knowledge, this session will provide invaluable insights to guide you through the home buying process. Buying a home is one of the most significant investments you'll make, and my goal is to equip you with the knowledge and tools to avoid common pitfalls. From understanding financing options to navigating inspections, I've got you covered. So sit back, relax, and get ready to learn. I encourage you to take notes and reach out with any questions. I'm here for you and happy to help. Let's make your home buying journey a successful and enjoyable one. If you stay to the end, there will be a special offer for those who choose to schedule a call with me. Thank you so much for being here, and let's get started. So as a new home buyer, how do you feel right now? Do you feel maybe a little bit stressed or anxious, concerned or uncertain? My goal is that by the end of this presentation, you'll feel more confident. So our agenda today will start with a quick introduction of myself, then we'll move on to why you're really here. At the end, you'll have an opportunity to book an appointment with me for a consultation on your specific circumstances, or just to simply answer any questions that you have. So my name is Wendy Flynn, and I'm a licensed real estate agent with RE/MAX Go. I attended Baylor University and graduated from Sam Houston State University in Huntsville, Texas. I currently live in Montgomery County, but I've lived and worked in the Houston area for most of my life. I love helping people accomplish their dreams of home ownership, and I'd love to help you too. So what are the steps to home ownership? Well, you've taken the first step in being here and learning. Next, you'll need to get pre-approved, then house hunt with your realtor, and finally move into your dream house. Now, these are just the highlights. We're about to get into the details, but let's go over some common mistakes. So mistake number one is not checking to see which programs you qualify for. What kind of programs do you think are out there? Do we have any veterans or law enforcement officers, firefighters, teachers, or EMTs? Well, you can get some free money. Many lenders have programs for you, and I do as well. If you decide to use me to help buy your home, I'll credit back up to 1% of the sales price as a thank you for being a hero. Or you may be a first-time home buyer. How many of you knew there were grants available? First-time homebuyer grants are typically designed to help you cover down payments and closing costs, and they usually don't need to be repaid. However, the specifics can vary depending on the grant program. Some grants might have conditions, such as requiring you to live in the home for a certain number of years. If you sell or refinance the home within that period, you might have to repay part or all of the grant. Qualifying for first-time homebuyer grants can vary depending on the specific program, but here are some common criteria that you might need to meet. Many programs require that you haven't owned a home in the past 3 years. Some often have income limits to ensure they help low to moderate income buyers. These limits can vary by location and household size. Some programs may require a minimum credit score to qualify. There might be some limits on the purchase price of the home you're buying. The home you purchase usually needs to be your primary residence. Some programs require you to complete a homebuyer course. It's always a good idea to check the specific requirements of the grant program you're interested in. You can obtain more detailed information on various programs through your lender. If you don't know any lenders, don't worry. I know plenty, and I can provide a list of some of the best, so you can work with one that will best meet your needs. There's also a first-time homebuyer forgivable second mortgage program. It's designed to help you with down payment and closing costs. But here are some key points. These programs typically offer a second mortgage that is either interest-free or a very low interest rate. The loan is forgiven after a certain period, usually 3 to 5 years, as long as you meet specific conditions, such as living in the home as your primary residence. You must meet certain criteria, such as being a first-time homebuyer, meeting income limits, and purchasing a home within a specific price point. For example, the 5-star Texas Advantage program offers a forgivable second mortgage that is completely forgiven after 3 years. Similarly, the Texas State Affordable Housing Corporation provides down payment assistance in the form of a deferred forgivable second lien loan, which only needs to be repaid if you sell or refinance within 3 years. These programs can be a great way to make homeownership more affordable by significantly reducing the financial burden of buying a home. Many are specific to the location you want to buy in. Regardless of where you buy, it's worth asking your loan officer what programs are available in your area and what you may qualify for. So let's move on to mistake number 2, which is not getting pre-approved. There are 3 pillars of a mortgage approval: credit, income and down payment, and assets and collateral. Loan pre-approval will determine how much you can spend based on your credit, income, and assets. Lenders look at your credit history to assess your financial responsibility and past payment behavior. A strong credit history with timely payments and a good credit score can significantly improve your chances of mortgage approval. They'll also look at your ability to repay the mortgage. Lenders evaluate your income, employment stability, and debt-to-income ratio. They want to ensure that you can comfortably manage your mortgage payments, along with your other financial obligations. They will also want to know what you have in reserves for a down payment, inspections, and closing fees. This will help them determine what loan type best fits your needs. I cannot stress enough the importance of being completely transparent about your debt obligations. I had a client early in my career that was initially approved for around $400,000 based on what they had provided to the lender. But after their credit was assessed, their debt load was so high that their qualification dropped to $167,000. They were already under contract for a house for $300,000 and ended up having to back out. Needless to say, they were very disappointed. Now, I always recommend that my clients confirm with the lender that they've pulled the credit to make sure there isn't anything that was missed, so they have an accurate amount they can start looking at. This is the key difference between pre-qualification and pre-approval. The pre-approval process can help you determine what house and price point you qualify for. It can estimate your monthly payment and identify which loan product best suits your needs. It can also increase your bargaining power when negotiating with a seller. It demonstrates that you're a serious and qualified buyer because a lender has already assessed your financial situation and determined you can afford the home. It gives you a competitive edge against the buyers without one. In fact, sellers are more likely to choose an offer from a pre-approved buyer. It also helps with a faster closing because the financial verification is already complete. And finally, it gives you confidence during the home buying process. You'll know your financial limits and can make informed decisions without worrying about last-minute financing issues. Understanding these things can help you prepare for the mortgage approval process and improve your chances of securing a loan, potentially leading to a smoother and more successful home purchase. So here are some tips for a simple approval. Some things you can do are call your loan officer or agent if you have any questions. Continue living where you've been living. Continue paying your mortgage or rent. Continue using your credit as normal. Keep working at your current employer. Keep your same insurance. Stay current on all existing accounts. And really expect requests for additional documentation throughout the process and respond as quickly as you can. If you know about any upcoming changes, be sure to communicate those up front. Things happen unexpectedly, but it's important to communicate with your loan officer and agent so they can provide guidance and figure out what needs to be done, if anything. So now for some things that you should not do. Please, please, please do not make any large purchases that will increase your debt to income, such as buying a car. If you're buying to replace and the payment will be about the same, it likely won't be an issue, but talk to your lender first. They may recommend waiting until you close on the home, if at all possible. Don't change banks or transfer balances or close credit card accounts, even if you pay them off. Don't consolidate debt or take out a new loan or co-sign for one. Don't apply for new credit. Don't max out your credit cards. Even if it's to buy things for the house, those things can wait until after the loan closes. So let's go ahead and move on. There are many different types of mortgages, but these are the most common. The conventional mortgage loan is often best suited for borrowers who have a strong credit score, stable income and employment, and low debt-to-income ratio. Typically, a credit score of 620 or higher is required, and buyers with higher credit scores may qualify for better interest rates and terms. Lenders look for a stable employment history and consistent income to ensure you can make your mortgage payments at a lower debt-to-income ratio. Indicates that you have a manageable level of debt compared to your income. Lenders generally prefer a DTI ratio of 43%. Conventional loans often require a down payment of at least 3 to 5%. However, a larger down payment can help you secure better loan terms and avoid private mortgage insurance. Conventional loans, unlike some other options, can be used to purchase a primary residence, a second home, or an investment property, which offers flexibility for different types of buyers. Next, we have an FHA mortgage loan that is often best suited for borrowers who have a lower credit score, a limited down payment, first-time home buyers, higher debt to income, and/or a need for flexible underwriting. FHA loans are more forgiving of lower credit scores. Buyers with credit scores as low as 500 may qualify, though a score of 580 or higher is preferred for lower down payment options. FHA loans require a minimum down payment of 3.5%, making them accessible for those who may not have a large amount of savings. While not exclusively for first-time buyers, FHA loans are popular among them due to the flexible requirements and lower down payment. FHA loans allow for a higher debt-to-income ratio compared to conventional loans, which can be beneficial for borrowers with existing debt. FHA loans offer more flexible underwriting standards, which can help those with unique financial situations or past credit issues. These features make FHA loans a great option for many borrowers who might not qualify for conventional loans. Now there's a USDA mortgage loan. It's often best suited for buyers who meet certain criteria, such as moderate to low income, limited down payment, and moderate credit scores. They are designed for properties in ineligible rural and suburban areas. The U.S. Department of Agriculture defines these areas, and you can check if a property qualifies on their website. There are income limits based on the area and household size, which you must meet to qualify. USDA loans require no down payment, making them an excellent option for buyers who may not have significant savings. While USDA loans are more flexible with credit requirements, a minimum credit score of around 640 is typically preferred. Finally, the home you purchase with a USDA loan must be your primary residence. Last, we'll talk about VA loans. As the name implies, VA loans are available to active duty service members, veterans, and eligible surviving spouses. You must meet the service requirements set by the U.S. Department of Veterans Affairs. VA loans require no down payment, making them an excellent option for those who may not have significant savings. VA loans are more forgiving of lower credit scores compared to conventional loans. While there is no minimum credit score requirement set by the VA, lenders typically prefer a score of at least 620. The home you purchase with a VA loan must be your primary residence. VA loans do not require PMI, which can save you money on your monthly mortgage payments. These features make VA loans a great option for many borrowers who might not qualify for conventional loans, and as far as I'm concerned, those that do. My parents used my dad's VA benefit when they built their last house. Their credit scores were in the 800s. They had no debt and plenty of money in the bank from the sale of their previous home. But because of their age at the time, they wanted to retain their funds in more liquid investments, just in case it was needed for medical care for my mother. So the VA loan made perfect sense for them. I feel very strongly that individuals that qualify earn this benefit and should use it if it makes sense for them. If you book a call with me, I'll put you in touch with a lender so y'all can determine which loan will be the best fit for you. Now that we've gone over the most common loan types, what kind of down payment do you think you need? We went over some of them when discussing the loans, but we didn't talk about where the funds can come from. Where do you think the funds used for your down payment and closing costs can come from? Do you think you can use money from your 401k? What about gifts or stocks, bonds, or cash? Do you think you can take out a loan and get a cash advance on a credit card? What about undocumented cash? Well, yes, you can use funds from a 401k for a down payment and closing costs on a mortgage loan, but there are a few important considerations. Do you want to take a loan and do it? You'll need to repay that with interest, and the loan amount is typically capped at $50,000 or 50% of your vested account balance, whichever is less. But the interest you pay goes back into your 401k account. This option does not incur withdrawal penalties. Your other option with the 401k is just to simply withdraw the money. But this option comes with a 10% early withdrawal penalty if you're under the age of 59 and a half. Additionally, you may have to pay income taxes on the withdrawn amount. It's important to weigh the pros and cons of your 401k funds for a home purchase. It can impact your retirement savings. Consulting with a financial advisor can help you make an informed decision. As for gifted funds for down payment and closing costs on a mortgage, you can use them, but there are some important guidelines to follow. The donor must provide a gift letter stating that the funds are a gift and do not need to be repaid. The letter should include the donor's name, address, contact information, and the amount of the gift. Lenders will require documentation of the gift, such as a copy of the donor's check or proof of the wire transfer. They may also want to seek bank statements showing the funds were deposited. Gift funds can come from relatives, close friends with a familiar relationship, employers, or community organizations. The donor cannot be affiliated with the builder, developer, real estate agent, or any other interested party to the transaction. Different loan types have specific rules for using gift funds. For example, conventional loans backed by Fannie Mae allow the funds needed for down payment to come from a gift, while FHA loans require a minimum cash investment from the borrower. You can also use stocks, bonds, or cash for down payment and closing costs on a mortgage loan. Vested assets in the forms of stock, government bonds, and mutual funds are acceptable sources of funds for the down payment, closing costs, and reserves, provided their value can be verified. Lenders will require documentation, such as the most recent monthly or quarterly statement from the depository or investment firm. Cash in a bank account is also an acceptable source for down payment and closing costs. Lenders will need to verify the source of the cash to ensure it's legitimate and not borrowed. Yes, loans can be used for down payment and closing costs on a mortgage loan, but there are some specific guidelines and considerations. Some lenders allow personal loans to be used for down payment and closing costs, but this is less common. The loan must be documented, and the lender will consider the additional debt when calculating your debt-to-income ratio. Many down payment assistance programs offer second mortgages, which can be used for down payment and closing costs. These loans may have favorable terms, such as low or no interest, and may be forgivable after a certain period. If you already own a home, you can use a home equity loan or line of credit to cover the down payment and closing costs for a new home. However, this option is only available to current homeowners. And finally, as we just discussed, borrowing from your 401k can be an option, but it comes with risks and potential penalties if not repaid. It's important to discuss these options with your lender to understand the specific requirements and implications. Lastly, undocumented cash cannot be used for down payment and closing costs on a mortgage loan. Lenders require that all funds used in the mortgage process be documented and sourced to ensure they're legitimate. This means that any cash deposits must have a clear and verifiable source. If you have cash that you want to use, it needs to be deposited into a bank account and seasoned for at least 60 days to be considered acceptable. Now, I know that was a lot of information, but your lender will be able to guide you on what is permissible and may recommend you speak with your financial advisor as well. Now, there are various fees associated with buying a home. Most of these fees that will need to be paid at or before closing. The fees can vary, but for a $400,000 home, the estimated amount for each fee would be about $675 to $800 for an appraisal. For title and escrow fees, these estimates can vary based on the specific title company and escrow service you use. But broken down, we're talking about title insurance, a title search, settlement fees, and then other little miscellaneous fees. The title insurance protects the lender and the buyer from any title disputes. The cost is typically around 0.5% to 1% of the purchase price. The title search fee is for the search conducted to ensure the title is clear of any liens or discrepancies. This can range from $150 to $300. The settlement fees cover the cost of conducting the closing. It varies depending on the purchase price of the transaction, but can range from about $1,500 to $2,500 in most cases. Additional fees may include document preparation, courier fees, and recording fees, which can add another $100 to $300 to the total cost. Next, you have your prepaid taxes and your insurance. Homeowners insurance, the average cost for that is about, on a $400,000 home, it's around $3,200, but it can vary based on factors such as the location, the coverage amount, and the insurance provider. Property taxes in Montgomery County, they're approximately 2.1% of the home's assessed value. So for a $400,000 home, this would be around $8,400 a year. Keep in mind that property tax rates can vary slightly depending on the specific area within the county, and the property taxes are often prorated on the closing date. So the seller would pay for the time they own the home, and the buyer would pay for the remainder of the year. There are also some exemptions that can help lower your tax rate, such as a homestead exemption, an over 65 exemption, and a disabled veteran exemption. Next, we have a home inspection. The typical cost for a home inspection can range from $350 to $700. The exact cost can vary based on factors such as the size and age of the home, the inspector's experience, and any additional services required, such as inspections for pools or septic systems. Your agent should have a list of inspectors they've vetted that they can provide in the event you don't already have one in mind. I know I do. I have several inspectors that I really enjoy working with that I think do a fantastic job, and I'd be willing to provide those to you, whether you use me as your agent or not. There's also a termite inspection. This doesn't have to be done every single time, but it is recommended, particularly on a VA home, they are required. The typical cost can range from $75 to $150, but the exact cost can vary based on the size of the home and the pest control company that you choose to conduct the inspection. So going on to mistake number 3, which is going to the listing agent to buy your house. So why do you think this might be a bad idea? For starters, the listing agent won't be able to represent your interests. It would be a conflict of interest to do so because they already have a contract with the seller. Consequently, you could end up paying more money, not just for the house, but for all of the incidentals that are part of the contract. When you hire a licensed real estate agent, they work for you. Having an agent that is familiar with the contract, addenda, and timelines, someone knowledgeable that can guide you through the process and negotiate on your behalf, is important. There is seldom an out-of-pocket cost, and I'll do everything I can to get the seller to cover it. In fact, I've never had them not cover it. You'll also have a skilled negotiator on your side. Your home is likely one of the largest investments you'll make. Why wouldn't you want someone advocating for you and helping you navigate the complexities of such a large transaction? You'll definitely want to make sure you both sign a buyer's representation agreement. When you sign that agreement, you're formally engaging the services of a real estate agent who will act exclusively on your behalf. This means the agent is legally obligated to prioritize your best interests throughout the entire home buying process. They will provide dedicated assistance, negotiate the best possible terms, and protect your interest in ways that an agent representing both the buyer and seller won't be able to do. In essence, signing this agreement assures you have a committed and loyal advocate working solely for you, which can lead to a smoother, more successful home buying experience. So on to mistake number 4, which is skipping the home inspection. This is true regardless of it being a resale home or new construction. That's not to say that home builders do shoddy work. It's simply because humans build the homes, and I don't know a single person on this planet that is infallible. Mistakes happen, and it's better to catch them early when they're easily fixable rather than down the road. Not doing inspection can cost you. You may end up inheriting issues that you can't see, but had you known, they would have been a deal breaker for you. Sometimes they can even be a safety issue, such as mold or termites. You miss finding out about other issues that by themselves may not be a big deal to you, but if there are several, the cost can start to add up and you may end up taking on more than you anticipated. You also lose the ability to negotiate, where the seller fixes either some or all of the issues, or provides you a credit in lieu of fixing them, or reduces the price altogether. You may also not know how to recognize when an addition or remodel has been done illegally and not within code. I had some clients that built new ones. They declined to do the inspection and they ended up regretting it. Some of the issues were behind the walls with the electrical, which required sheetrock to be pulled, the issue to be fixed, and then the area put back together. Because of the earlier issues near the end of the warranty term, they ended up doing an inspection and a structural issue was found in the attic. Fortunately, it didn't require tearing anything apart, but had they not gotten the inspection, they wouldn't have found out until it was too late, and they would have been on hook for the cost to fix it. Bottom line, getting a home inspection helps you make an informed decision and avoid potential future expenses. Knowing the true condition of the home ensures peace of mind and confidence in your investment. Which leads us to mistake number 5, thinking you can't afford a newly built home. Here are some reasons to consider buying a newly built home versus a resale home. There's no baggage from the previous owners. Newly built homes often come with the latest design trends and energy efficient appliances and smart home technology. You may have the opportunity to customize the feature and finishes and layouts to suit your preferences. New homes generally require less maintenance and come with builder warranties that cover potential issues in the early years, saving you money. Modern building codes and construction techniques often mean better insulation and energy efficient systems, reducing utility costs. New homes are often move-in ready with no need for renovations or updates. Their lenders are well versed in many of the loan options and down payment assistance programs mentioned earlier. They're also familiar with the builder's processes, making it for a smooth transaction. Now, you don't have to use their lender, but oftentimes it's a good idea to. I know of at least one builder's mortgage company who has developed a program for buyers who have less than perfect credit. If you're interested in this program, schedule a call with me and we can discuss the details. Many builders are offering great incentives if you use their lender. And these things are such as credit for closing costs and lower interest rates. The closing cost credit can help lower or eliminate the amount of money you have to bring to the closing table. And the lower interest rates make the home more affordable than a resale home, even if it costs slightly more. Plus, your home insurance will likely be less expensive, which equates to more savings. As a general rule, a newly built home costs 13% less to insure than a 10-year-old home, and 32% less to insure than a 20-year-old home. Just a reminder though, you will still want to use an agent when buying a new home. Real estate agents have a deep understanding of the local market, builder reputations, and the nuances of new construction contracts. They can provide valuable insights and guidance throughout the buying process. Agents are skilled negotiators who can help you secure the best possible deal, whether it's negotiating the purchase price, upgrades, or closing costs. Builders often have their own sales agents, so having your own representation ensures someone is advocating for your interests. Even though the builders have the models you can visit, make sure your agent accompanies you. New construction contracts can be complex and filled with builder-friendly clauses. A real estate agent can help you navigate the terms, explain any unfamiliar language, and ensure you understand your rights and obligations. Agents can recommend reputable home inspectors and accompany you during walkthroughs to identify any issues that need to be addressed before closing. This ensures that the home meets your expectations and is built to code. Builders often offer various incentives such as financing deals, free upgrades, or closing cost assistance. A knowledgeable agent can help you take full advantage of these offers. Buying a home, especially new construction, can be time-consuming and stressful. An agent can handle many of the details, coordinate with the builder, and keep the process on track, allowing you to focus on other important aspects of your life. In most cases, the builder pays the real estate agent's commission, so there is no direct cost to the buyer for using an agent. This means you can benefit from professional representation without incurring additional expenses. Overall, using a real estate agent when buying a newly built home can provide valuable expertise, protect your interests, and make the process smoother and more enjoyable. So let's recap. We discussed 5 of the most common mistakes buyers make. We talked about making sure you look into any programs you may qualify for and getting pre-approved for your loan. We talked about the value of using your own agent rather than going through the listing agent or the builder's salesperson. We also discussed the importance of getting an inspection. And finally, we talked about considering a newly built home and the advantages that go along with that. So how are you feeling now? Are you feeling better and more informed? Do you feel like your time was well spent? Do you feel confident in being able to start the home buying process this year? Is it fair to say that these tips will give you a significant advantage when buying a home? I don't know what you knew before you joined me today, but is it safe bet that a lot of what we covered today was new and valuable to you? Would you like to speak with me one-on-one where I'm personally invested in your success? I'm offering free consultations for a limited time to help you accomplish your goals. Additionally, I promised a special offer for those who schedule a call with me and choose to use me as their agent. As a reminder, if you're active duty, a veteran, police, fire, EMS, or a teacher, I will credit back 1% at closing. But that's not all. Even if you don't work in one of those professions, if you are a renter and you're ready to start your home buying journey, but you're stuck in a lease, I will help you buy out your lease with a credit at closing. Of course, both of these specials are predicated on us working together. So go to my links and choose schedule a call. If we're a good fit, great. If I'm not a good fit for you, no harm, no foul. So what are the next steps? If you're looking for personalized guidance in your real estate journey, I can help. I can connect you with my team of trusted real estate professionals to help get you started. We'll help you get pre-approved and find your dream home. Together, we'll ensure a smooth and successful transaction. I just want to thank you so much for your time today. I hope to speak with you soon about your home ownership goals. And once again, just go to my links and click schedule a call, and we'll get started on your path to home ownership. Have a wonderful day. Thank you.